Hey guys! Welcome back to the channel. Today we are going to be talking about property insurance. I know that sounds super exciting. But if you have a fire in your property, or rental property, you're going to be happy you watched this video. As a owner of millions of dollars of multifamily properties, this comes up every acquisition with my insurance broker, and this topic is something you must understand. It is the difference between actual cash value and replacement cost. Personally, I think an insurance agent as an advisor is the way to go on this topic. But for you viewers looking to learn more and buy direct online, let's get after it. Nearly half of all homeowners don't understand terms like replacement cost or actual cash value and what it means for their home insurance coverage. So if you're struggling with this topic, you're not alone. Insurance policies are written in complicated legal wording and tough to follow. But let's break it down. Replacement cost and actual cash value refer to how your homeowner's insurance policy reimburses you for property damage after a covered loss. While both types of coverage help with the costs of rebuilding your home or replacing damaged items after a covered loss, they are different in determining the value. Actual cash value (ACV) is the amount equal to the replacement cost minus depreciation of a damaged property at the time of the loss. The actual cash value is different than the actual value of a piece of property. It's not the actual value for which the property could be sold, which is always less than what it would cost to replace it. Sometimes, insurance companies use actual cash value to determine the amount to be paid after loss or damage to your property. Actual cash value leaves you in a tough position because you won't be able to go out and buy a similar building new. At least not without some of the money to replace it coming out of your pocket. Replacing your personal contents, or even worse, your home, on an actual cash value or depreciated basis, leaves you at a loss compared to replacement cost settlements. This is important to know on your rental properties, as well. Replacement cost provides you with a payment equal to what would be required to replace the lost items or entire building. Replacement cost is superior to actual cash value, because it allows you to put yourself in the same position you were in prior to the loss. It provides you with the necessary money to replace your property. Under replacement cost coverage, the insurer would pay the amount required to replace the covered property with a like-kind new one. One common misconception about replacement cost is how it will be paid. Often, you must actually replace the items first before you're able to collect a full settlement. There are exceptions, for example, in many high-value home policies, the terms may be different. Many policies also include a guaranteed replacement cost clause that allows some wiggle room around the total insured value of the home when it's been determined that the cost was a little off. This can depend on your specific policy wording and the type of policy that you have. Again, this is where an insurance agent or broker will be able to guide you. For example, some policies might state that you'll still be eligible for replacement cost if you were insured to at least 80% of the value of the actual reconstruction cost. The biggest concern is if your house burns down, you don't want to find out that your homeowner's insurance policy pays less than you thought it would. Here are some things you can do to make sure you're not underinsured. 1. Find out how much it would cost to rebuild your home. The amount of insurance you buy should be based on rebuilding costs, not the price of your home. The cost of rebuilding your house may be higher or lower than the price you paid for it, or the price you could sell it for today. Your insurance agent generally can calculate rebuilding costs for you, or you can hire an appraiser to do the job. Your local real estate agent will be able to give you the names of appraisers. The cost of rebuilding your house is based on local construction costs and the kind of house you own. This includes the type of exterior wall construction, frame, masonry or veneer, the square footage of the structure, the style, ranch or colonial. For example, the number of bathrooms and other rooms, the type of roof and the materials used, and whether it was custom built. Other things that affect the rebuilding cost are an attached garage, a fireplace, exterior trim, and special features, like arched windows. If you want to estimate yourself, A good way to get a ballpark estimate of the cost of rebuilding is to calculate the square footage and multiply it by local building costs per square foot for your type of house. For example, suppose your home is 2,000 square feet and that building costs in your community, and for your type of house, are $80 per square foot. The cost to replace your home would be approximately $160,000. You can ask a real estate agent or appraiser for average building costs in your area. 2. Make certain that the value of your insurance policy is keeping up with increases in local building costs. If the limits of your policy haven't changed since you bought your home, then you're probably underinsured. Many insurance policies include an inflation guard clause that automatically adjusts the limit to reflect current construction costs in your area when policies are renewed. If your policy doesn't include this clause, see if you can purchase it as an endorsement. 3. Find out whether building codes in your community have changed since your home was built. Building codes require structures to be built to minimum standards. If your home were damaged, you might have to rebuild it to comply with the new standards. In some cases, complying with the code may require a change in design or building materials, and may cost more. Generally, homeowners' insurance policies won't pay for the extra expense, but insurance companies offer an endorsement that pays a specified amount toward these costs. 4. Your homeowner's insurance policy does not cover flood damage. Ask your insurance agent or insurance company representative if your home is in an area that is likely to be flooded. If it is likely to be flooded, you will need your agent to help you get flood insurance. I hope you enjoyed this video and found it helpful. Thanks for watching. Please comment below if you have any questions. Please also don't forget to like this video and subscribe to the channel.